Good afternoon, everyone. This is Tom Osa. We're here for our Small Business Friday Forums. This is the 7th in our series. We started them back in early March in order to provide good information for those of us that are going through not just the health crisis, but the economic crisis that has transpired during the current COVID-19 health pandemic. We endeavor to provide good, useful, and updated information each week from qualified experts that are in tune with the changes that are currently happening in our society right now, and most importantly, in Rockland County, the place where we live and work. This series is sponsored by the Workforce Development Board of Rockland County, as well as the Chamber Alliance of Rockland, as well as a good number of small businesses in the area. I see Dr. Eric Goldman, who is one of the inspirations for this, these Friday forums, is on the line with us, so we're glad to have him here, and many other small businesses that have been supporting this effort all the way throughout. Our agenda today is we're doing the introduction right now. We're going to have Mr. Thomas Morley, who is the director of the Rockland Small Business Development Center. He'll be talking about part 2 of the Paycheck Protection Program. Just a reminder to everybody, anybody that's not speaking, please make sure that you mute your microphones so that we're able to speak. And the second part of our presentation will be from Mitchell Kahn. He's a senior vice president of Hunter Financial Advisors, a friend of mine that I know for several years through one of our networking groups. So we'll introduce him after Mr. Morley is done. First wanted to just very clearly thank again Deborah Thomas, who is the executive director of the Workforce Development Board. I've been on the board, I didn't even realize how long that I've been with the board. I think it's since 2014, after Hurricane Sandy. I'd been involved in the disaster recovery phase for local residents within Rockland. And I was asked back then to hop onto the Workforce Development Board. And so I've known Deborah for several years now, and she's a wonderful leader. The Workforce Development Board acts as a conduit for many different governmental agencies and business industries in the area. The most vital one is right now is the Department of Labor. And we're also in tune with many of the policy updates that happen at the government level of New York State. And also Debbie's very involved with the Rockland Teacher Center Institute as the executive director there. And their organization is working with educators online to adjust during the crisis. One other note that Debbie had mentioned several weeks ago, there's updated information on the community crisis grants at rocklandgives.org. Please take a look at that. Also, I have some updated numbers. Now, this is a little bit behind from the current numbers. This was 1 o'clock on April 28th. So at that point, we had about total approved loans for the Paycheck Protection Program was about a hair under 1 million approved loans. I won't go through all the numbers here, but the most important part is that in this particular phase of the Paycheck Protection Program, and Mr. Morley will speak more to this effect, many small businesses have been able to qualify prior to, let's say, larger businesses putting their hand in the pot. You know, nothing against them. We're all trying to do what we can. But as we all know, the small business drives American commerce, and that's a vital component to our economic recovery moving forward. So without further ado, I'd like to introduce Mr. Thomas Morley, Regional Director of the Small Business Development Center for New York State. The chapter is located in Rockland Community College. It's actually where I started going to college before I transferred over. It's a wonderful school. I was there for several years before I transferred over to Ramapo. I also know Chris Thiesing from the Small Business Development Center, so always speak with him on a regular basis. little bit more about Mr. Morley. He's been the director of the SBDC since 1987. If you look at some of those numbers, the amount of awards and jobs created and or saved, this crisis, saved is an important word. In 1996, Business Leader of the Year through what was then known as the Journal News, now LOHUD, Director of the Year 97. I noted at the bottom he majored in philosophy at Fordham University, which was one of my favorite topics back in the day. And I also see, we didn't get a chance to talk, Thomas, but founder of Data Century Technologies it sounds like it's an IT related thing.
No, actually it was, well, sort of. We had three principal product areas: data encryption systems, test and measurement equipment. We manufactured FFT spectrum analyzers, fast Fourier transform analyzers, and we developed software and control systems and remote diagnostics for reverse vending, for machines that take back cans and bottles in the market space. So it was a fun company. We had a good time with that. Yeah, and we actually started right here in Rockland, and Suffern was our first commercial space was in Suffern. Yeah.
How did you get involved with the SBDC?
Sold Data Century and was like, okay, I should do something instead of sitting around looking stupid, and figured, okay, SBDC sounds like fun for a bit, and it's been very fun and satisfying, and it's been really fun work. We get to work with people who are starting things, people who are fixing problems, obviously, but we work with a lot of people who are starting new stuff. We've done some very high-end projects with companies dealing with molecular chirality, whether molecules are facing right or left-handed. We've done delicatessens and food trucks as well. So it's been a lot of fun to work with so many people that are creative and ambitious.
It sounds like your exit strategy from company to let's say not-for-profit or endeavors to help others is similar to my strategy long-term. Is do some work and then eventually try to give back. So kudos to you.
So it's been fun.
You had mentioned that you were going to talk a little bit about some numbers with the Paycheck Protection round 2, some various, well, I would say I'm just going to turn it over to you, and feel free to go anywhere you want with this. I saw many of your presentations thus far, and can't wait to hear what you have to offer today.
Well, thank you. I appreciate that. I should preface everything by saying, the numbers that Tom brought up a bit, were a couple of days ago. We're now up over 1.2 million loans done. And yes, there's lots of people out there who are saying, hey, I didn't get my money. I didn't get this. I can't get an answer. The bank won't talk to me. I can't reach anybody. The scope of this problem is immense. This is the first time and the only time in U.S. history that the entire country is a declared disaster area. One of the numbers that I think is important for folks to remember, or among the numbers, I think, we've got approximately 12,000 small businesses in Rockland County. There's about 28,000 in Westchester. Our regional center also covers Putnam County, which is about another 9,000 or so. So there's almost 50,000 small businesses in the 3 counties closest to us. That's just 3 counties. I mean, New York City, there's 14,000 small businesses in the space below 14th Street alone. So, there's a lot of competition for this. I'm glad that they did make some distinction between large banks, medium banks, and small banks in the second round of Paycheck Protection. Regrettably, in some senses, what might sound like a good solution, a lot of small businesses bank with larger banks because that's the bank in the neighborhood. So we have a lot of folks who bank with the Chases and the Citibanks and the folks like that. So even though they're a small business, they're dealing with a big bank. So they've had a hard time getting through the system. Be that as it may, lots of money is getting out there. I mean, $349 billion went out in the first round. There's 300 and some odd billion dollars in this round. So it's real money. It is getting in the hands of real businesses. In everybody's hands, no. But SBA, I don't often defend them, but I kind of have to defend them a little bit here. They're doing the best they can. They're processing over 150,000 loans a day. I mean, just picture processing paperwork on any 150,000 things in a given day. It's not easy. And SBA has scaled up to that. So, they're trying. Be that as it may. In terms of eligibility, anybody that's a small business is eligible. You had to have payroll in some form or other as of April 3rd, functionally April 10th. Businesses that did not have a specific W-2 type payroll or 941 type payroll were eligible to apply as independent contractors. And they can use their Schedule C or 1099 miscellaneous as documentation for what their wages were, and they're eligible for the program. The calculation is actually very direct. You take your 941s, your 4 941s from last year, from 2019, add them up, divide by 12, that's your average monthly payroll. Multiply that average times 2.5, that's the amount that you can borrow. Among the distinctions it's important to look at here is that this is a loan with your bank. This is not a loan from the government. The government's backing the loan, but the loan is not from the government. The loan is from your bank. It's totally separate from the Economic Injury Disaster Loan Program, which is from the government. So that's an important distinction to make, that this is with your bank, it's not with the government. If you have a seasonal business, you can, in the course, and some banks were not exactly dynamic enabling this in their applications. Keeping in mind, of course, that banks were asked at 10:30 on a Thursday night when the regulations were released to have this ready at 9 o'clock Friday morning. It obviously didn't work. Then they had one more week in which to try to get things up to speed, and they've done a respectable job of that. If you've got a seasonal business, let's say, a summer business or a winter business or some such thing, you can, under the rules, select that time frame, particularly if your time frame is starting now, as the time frame to use for your application. It's probably problematic for some folks to do that because banks are not being real good about giving you the opportunity to say, yeah, this is what it was for the year, but this is the period that I want to look at. The regulations do allow it. You may have to talk to your bank to get that done. Expenditures. Okay, 75% of the money. So we're going to sort of do expenditures and forgiveness sort of together. There are appropriate expenses and inappropriate expenses that you can book under a Paycheck Protection Program loan and have the loan forgiven. The good thing about a loan that's forgiven is you don't pay it back. It's like the old joke, free food always tastes better. Well, free money always feels better also. So if you spend 75% of the money on wages and salaries and associated costs, for example, group health insurance is an eligible payroll cost. The employee, not the employer, the employee share of federal withholding taxes is an eligible expense. So you've got a couple of things that you can put into that 75%. The other 25% can be spent on mortgage interest, operative word there, interest, not principal, mortgage interest, leases or rents, and utilities. Now, utilities does include anything that most people would think of as a utility. Heat, light, and power, telephones, data, which some folks don't necessarily think of phones or data. Particularly folks who use maybe a VoIP phone system may not think of that as a utility, but yes, that is an eligible expense to be reported for forgiveness. Another condition for forgiveness is that you have to either restore people to their pay rate or within 25% of their pay rate that was in effect on February 15th of 2020. You also have to maintain 75% of the head count, the FTE, full-time equivalent head count that you had in place on February 15th of 2020. For those that don't generally work with FTE, full-time equivalents, 2 people working 20 hours a week is 1 FTE. 4 people working 10 hours a week is 1 FTE. It's equivalent to 1 full-time employee. So you have to restore your payroll and restore your workforce, and you have to restore them. Go ahead.
Quick question. For that full-time FTE, is that at the 35-hour or 40-hour? Because I'm a little unclear of what the...
The general rule that we use is 40 hours.
Got it. Okay.
Yeah, if your company uses a 37.5-hour work week or a 35-hour work week, yes, you should apply it in terms of the policies your company uses. In general, for illustration, we just generally go with 40 hours. But it would be whatever your standard work week is. Yeah. So you have 8 weeks from the origination date of the loan to restore the workforce, or June 30th, whichever is later. Our 8 weeks is now going to take us past June 30th, so they will be changing that date. They haven't actually changed it in writing yet, but they'll have to, because the 8 weeks will take precedence with that. We're still not 100% sure of exactly what sort of report banks will be asking when it comes to forgiveness. If you use a payroll service, you're in good shape, because as you probably found out if you have already applied for Paycheck Protection, Paychex, ADP, most of the other payroll services have a CARES formatted report that calculates correctly. It's acceptable to the banks, acceptable to Treasury, acceptable to SBA. If you don't use a Paychex service, you'll need to provide a general ledger report, probably a payroll journal, perhaps a 941 filing that shows what your payroll actually was and that you used the money for this. There was some talk that companies should open up a separate bank account so they can identify which dollars went where. Not necessary, that's overkill. But you do have to be able to prove that the money that you got under the Paycheck Protection Program was used for those expenses. And you can prove that. I mean, this is what you spent. You brought your people back that have been laid off or furloughed, you're paying them, and you used the money for that. There are no payments due on this loan for the first 4 months. So you've got time to get the money, use the money, report on the expenses, and request forgiveness before a payment would be due. Once forgiveness is granted, essentially, you no longer have to pay that money back. And it sounds like a timer just ran out. Probably on my end. Oh, that was on my end, sorry. So once you file for that forgiveness, SBA is actually going to pay your bank the balance on that loan. And that's why they had to stop the program when there was no money available, because SBA is committing that money and saying, okay, to the bank, you go lend it and we'll pay that back to the bank. So SBA is actually paying that note. Right? So hence SBA needed that money from Congress for that to happen. So that's kind of an overview. As of yesterday, there was still a little over $150 billion left in the program. It is going fast. I mean, there's 5,000 banks are sending in applications. SBA is processing north of 150,000 applications a day in this. If you are banking with a large bank and having trouble, call us. We'll try to point you in the direction of a smaller bank that might be moving a little more quickly than the large banks. I don't want to single any bank out, but there are some of the larger banks that have been, at best, disastrous in this process, that have been non-communicative, non-transparent, and have just been, they could try the patience of Mother Teresa. So, any questions? Be happy to take any questions. If anybody's got any questions or anything of that nature, if you've got a question on economic injury disaster loans, we've been working with a lot of those as well. So we can open it up for some questions.
Good afternoon. My name is Vivian. I'm on the phone because I'm driving, so I'm not under my computer. I have a question for you. With regards to the loan forgiveness, I know in normal circumstances, you would get at the end of the year a 1099-C, which is a cancellation of debt. Therefore, you have to claim that money that they canceled on your tax return and pay taxes on that money. Does that still apply in this case, or that is also waived?
No, they haven't finalized what's called the final interim rule as yet, but no, this will not be considered taxable revenue.
Okay. All right. Thank you.
You're welcome. Drive carefully.
Thank you.
Just to add to that comment, they released last night an interpretation that it is definitely not taxable, but the related expenses are not deductible either.
Correct.
That's
right. Yes.
as of last night.
Yeah. Yep. Yeah, because it's, I mean, mathematically, it's a net neutral at the end of the day.
Mm-hmm.
If they want you to take it as revenue, well, here's the expenses. So it's a self-canceling kind of thing. So yeah. Now, I will also note the SBA has been, particularly in view of some folks returning money in the program, you know, some folks that people could say didn't really need it, like the Los Angeles Lakers basketball team, probably didn't need paycheck relief.
Whole Health, Rockland, Chiropractic and Nutrition. Good. How are you doing?
SBA will probably go after, you make a bunch of representations as part of the application process. One of them is that you have suffered damage due to COVID. You need this money because you don't have reasonable access to capital elsewhere. That becomes important because if you don't use this money for payroll, it becomes a loan with your bank at up to 4% for 2 years.
Mm-hmm.
So they're not going to be little payments for most companies because it's only a 2-year repayment, as opposed to idle economic injury disaster loan money, which is 30-year money, which is a very small payment. SBA will be going after some folks and saying, you got this money, you used 5% for payroll and 95% for other stuff. They conceivably will consider that fraud. Mm-hmm. Because you represented in the application that you want this money and you need this money for payroll. Now, if you committed 70% instead of 75%, they'll reduce your forgiveness by an appropriate amount, by 5%. But you know, if you're down at 10 or 15% used for payroll and the rest of the money used for other stuff, that's not going to be a good situation. This money is intended for payroll. Yeah, it covers utilities and rent and some other stuff, but it doesn't cover inventory. It doesn't cover working capital. That's not the intent of this. So I would urge everyone who's applying for this, do be extremely careful that this money be used appropriately. Or you do open yourself up, next month, probably not. Next year, probably. It's the government. At some point, someone's going to have to justify their existence and go chasing people. And they'll go look at this program and say, hey, there's got to be a bunch of people here that use the money incorrectly, and they'll find it and they'll start going after you. And they'll apply penalties and all kinds of stuff. And it's the government. So yeah, it's glacial, but they're effective ultimately. So just, I would urge people to please be careful with it.
This is Vivian again with another question. Can I ask a question?
Yeah, sure. We have time for 2 more questions. So you'll be one. If anybody else has a second question, please go ahead.
Okay.
After Vivian.
Okay. All right. So my question is, for someone who is self-employed, they don't necessarily, have themselves on payroll. They take withdrawals from their company. What sort of proof would you need for that?
You would need the Schedule C.
Okay.
You would need the Schedule C from your personal tax return to document the income that you declared from 2019. I should preface, part of the whole thing with eligibility and everything else, you have to be a taxpayer to be in any of these programs. If you're not paying taxes, you're not eligible. The government essentially is saying, okay, we'll help you out if you're playing in the same sandbox as everybody else. So if you're a sole proprietor or an independent contractor who's now eligible to apply for this, you would use your 1099s that were sent to you by employers or by other corporations, or your Schedule C to document what your income was for the period. And then again, the same thing, divide by 12, multiply by 2.5. Mm-hmm. But you have to be a taxpayer. You also have to be in the United States. You can't use paycheck for anybody whose permanent residence is not within the United States. Physically within the United States.
Mhm.
That's an issue for some seasonal employers who might, participate in the various visa programs to bring folks in from overseas.
That's interesting. So say for instance, it's unrelated to my business, but say for instance, there's someone that is a US citizen, but is working remotely outside of the US for whatever reason. They can't be factored in, it sounds like.
That's correct. They have to be illegal. They have to be legally residing in the United States.
And not traveling abroad or hunkered down somewhere abroad.
Oh no, if you're just hunkered down, but you have a legal address in the United States, and your address of record for payroll and for taxation is the United States, you're eligible.
Okay, all right.
Right. So if somebody got stuck overseas as part of this, the various travel restrictions, yeah, they're eligible because they are a resident ordinarily. That this affects more folks that are here on like J1 visas and things like that, students. So if you've got employers in New York City, where a lot of the colleges in New York City or universities in New York City will have a large number of foreign students, if that one of those foreign students is working someplace locally, but the legal address for that student is outside the United States, that portion of the payroll is not eligible.
Mm-hmm.
The other thing I should clarify on eligibility, only the first $100,000 of a particular salary is eligible. So when you report what your payroll was, one of the questions on the application is you reduce it by any amounts that are over $100,000. This program just covers the first $100,000 of an individual's payroll.
Got it. We have time for one more question.
I have a question.
Go ahead, Ken J.
Yes, hi. How are you all? I'm in the credit card merchant service business here, and I have quite a few small merchants that are really getting shafted from the banks, not accepting their applications or just putting them in the back of the pile. What could I help them do for them to get some loans? Because they're struggling. Let me tell you, being in the streets and having merchant services, I speak to my merchants all the time, and the biggest problem right now is getting money.
Oh, absolutely.
I can answer that because I just had this exact same problem.
Dr. Eric, I apologize. We only have time for just one more question.
I'm not asking a question. I'm giving the answer because I just went through that. Exactly what he said.
Okay.
I applied at Chase, and
That's the bank that most of them use, and they're shafting.
Right. Yeah, and so what I got from them was, we've accepted your application. There are 100,000 people ahead of you. That's what they told me. So we're giving you the opportunity to apply to someone else. So I called your buddy Aiden Hand at KeyBank, and he said they have to process everyone that they already put through, but the SBA ran out of money and didn't approve first. So a buddy of mine who's a chiropractor suggested I try an online lender, and I just put in the application to Cabbage with a K. They accepted it. I put all the documents in, and we'll see if we can do better there. Because my understanding is the big banks want the big lenders to go first. They're going to go to the big companies first. It's easier for them to give away 100,000 than my measly $5,000 for one employee. But that's my experience, so I'm just letting you know.
Excellent, thank you.
That's not an invalid experience. We've had many clients that have shared emails with us from banks that essentially have said, and it's always interesting to see a bank say, gee, you might want to go somewhere else instead of dealing with us, but that's what many of the banks have been saying. There is a group in Albany that's a quasi-public benefit corporation. It used to be known as NYBDC, New York Business Development Corp. They're now known as Pursuit Lending. They're at pursuitlending.com. They were accepting applications yesterday. Cabbage is accepting them. PayPal, if you deal with PayPal is accepting applications. There's a number of services. I'll do the shameless plug. The number over here is 845-356-6065. So it's getting, oh, there it is. Thank you, Tom, for bringing that up. Give the office a call here, and we can point you in the direction if you're looking for a lender. There's a bunch of lenders that we do know are still taking applications, but that's a fluid situation because fortunately a lot of the smaller lenders are shutting things off when they get to a point at which they cannot handle any more applications.
Okay, I know we're looking for a hard stop for you by 1 o'clock. I'll be very brief. Thank you very much for being here today. Like I said, I loved your presentation at the Rockland County level, and I was really just thankful that you were able to make the time for this. We very much appreciate it. Hope you have a good weekend, a safe and healthy one.
Thanks, you too, and very best to you and the members and everything else, and we'll be in touch.
All right, wonderful.
Thanks.
Bye.
Our next guest is Mitchell Kahn. He's the Vice President of Hunter Financial Advisors, the Senior Vice President located in Tarrytown, New York. I know Mitch for a good, I'd say about 4 or 5 years now. We're in a networking group together, 7:30 in the morning on Thursdays. And, I guess from a personal perspective, I find his understanding of the markets to be without any, I guess, sort of, how do I put this? He's really good at what he does. He doesn't just says, all right, this is what the markets are. He really is able to just crystallize in a very layman's terms way, the things that many of us as Americans would need to focus on over the course of the next several years. So, a little bit about Mitch. He's part of Hunter Financial Advisors. He's been in the industry for 25 years plus. If anybody is into stocks and securities, Series 7, Series 63 registered, also registered for life, health, disability, long-term care insurance. Bachelor of Science from New Hampshire College, then flipped over to the College for Financial Planning. He's a chartered retirement plan counselor, and he's also charitable as well. Spends time as a member of the Rotary, and was the recipient of the Distinguished Service Award. I didn't write which year, but so without further ado, I just wanted to thank Mitch for being here. And how are you doing today?
I am very good. You can hear me, right?
Yes, I can.
Okay. Yes. Thank you for the and thank you for the very kind words, and thank Tom Morley too for that great description of the PPP. It was I learned I'm a recipient of it, and I've learned even more than I knew. So I appreciate you going over that. But Tom went over my background, but just a side note. I know this is a Rockland group. I'm not born, but pretty much bred in Rockland. I moved up. I'm 57. I moved up to the county when I was 6. So in 1969, I moved up here. I'm a proud Nanuet senior high graduate, and I live now in Valley Cottage. So I've basically been a Rockland boy my entire life, and love it here. And my business now is in Tarrytown. Since I live in Rockland, I spend most of my time here, and very, very happy and love the county. So we're going to try to do this. I only have 15 minutes. I could talk about the markets and securities and the economy for hours, but obviously we won't do that. So we're going to try to give you an encapsulated view of what's happened, where we are, and possibly what we can look for going forward. And that's going to depend really on a lot of different things, which you'll touch on. Just in a ballpark, on numbers. This recent decline started back on February 20th. That was the all-time high for the S&P, and a little over 3,000. And we retreated in 1 month to March 23rd to 2188. So in about a month, we had a 40% peak to trough decline in the S&P 500. We had much bigger decline in the Russell 2000 and some of the smaller cap and smaller indices. But since the S&P is market weighted, we had a slightly smaller decline in that index. Since that time, we've regained 35% of the 40%. Down is always a larger number than up. So the most recent high about 3 days ago was 2961 on the S&P. And just so everybody knows, that anybody's not looking at the market today, we are down significantly on all the indices. The Dow's down 565 as we speak, and the S&P is down actually 80 points. So it's a weaker day. A lot of that is due to the fact that we've had such a large run up in the last month. Some of it warranted, some of it potentially unwarranted, but I'll get into that as we go forward. Earnings are basically down, although we're still disseminating the first quarter. Earnings are down about 15% for the quarter, but if you look at the time frame of the virus, we really didn't go dark in the economy till really the mid part of the first quarter. So most of the quarter is really full, is with the economy going full force. And until we really closed down, we were thinking that the first quarter could be a 3+ growth quarter for the economy. And now, and since then, obviously, the second quarter could be up to -40%, some analysts think. So we've obviously, since we shut down the economy in most businesses in most of the country, the economy's obviously gotten much softer. And it's really apparent in major cities. I mean, if you can drive through New York now and not see another car on the road, which, if we live here, so we're all very familiar with New York City, and we know how eerie that feels. But it's been the same way in Chicago. It's been the same way in LA. Recently, though, LA has started to open up a little bit. I've heard of traffic jams starting to resurface. It's almost I heard one analyst say it's actually almost a good thing. They feel more at home when they were actually had to wait in traffic a little bit on some of the LA roads, which as we know can get far worse than New York roads.
Mm-hmm.
And that's really going to be the key for how we come out of this. I know some of the states are opening, and I know some manufacturing is starting to come back. We're starting to see. Well, I mean, Boeing is is starting to open up some of its plants in Washington and in South Carolina. I'm sure the car companies have already announced that in the next 2 weeks they're going to be starting production up, and that will all feel really, really good. But from a market, and I'm not talking the human perspective now, I'm really just talking a markets and financial perspective now. You really won't feel a real full recovery in the markets if they do recover, and I'll get into that in a second, until we really see the major cities, until we see New York City really start to recover, until we see Chicago, Los Angeles, San Francisco. Because truthfully, folks, that's where the money is, and most of the portfolio managers live in a lot of these places. A lot of the hedge fund managers live in a lot of these places, and it's great that that some of the other places are opening up and their economies are going. But it's from a market perspective, it's really what people see on a day-to-day basis, so it really has to, for this thing to come full cycle, we really have to see the tri-state area and some of those other areas really start to open up. So.
Mitch, I have a quick question. Just a side note. You mentioned about the larger economies, for instance, New York City, Los Angeles, and such. Would you say, and I guess this is kind of tough to gauge from like a stock market or equity income perspective, but would you say that smaller markets might be poised better to, let's say, to grow in this type of a climate? Obviously, they have to be much more flexible and innovate in this climate. But is this potentially an opportunity for the smaller businesses that don't have maybe a 30-year or 50-year fleshed out business model to adjust in this sort of economy and be able to stay sustainable in the short term at very least, while the larger economies are growing again?
Yeah, I see your point, and yeah, I mean, I do agree with that. There will be certainly some more opportunity in more of the rural sectors. I think you'll see, obviously, for real estate prices in the city, you might see a bigger shift from apartment living to home living, which could mean more people moving from the city to the surrounding area. Long Island, Westchester, Rockland, even farther north, because not that we're not hit badly, we are, but certainly this Manhattan and the other boroughs are hit probably much worse than obviously we are. So there are, you will see definitely opportunities, and you will see a shift potentially in where people live and work. And a lot of people, from a real estate perspective, and especially a commercial real estate perspective, you'll definitely see office buildings, space free up as more people decide that, they'd rather work from home and not work so much from the office. So there is definitely, there's always opportunity. You just have to look, through any circumstance. There's always opportunity. You just have to be willing to look to the other side. But back to the economy what I was going at. We've lost. If you look at the weekly unemployment claims, we've lost 30 million jobs in 5 or 6 weeks. I am expecting that a lot of those come back as we start to open up the country. But there's obviously no guarantees on that happening. A big number today that got released was the April ISM, or manufacturing survey, and manufacturing is still about 25-30% of this economy. And just so everybody knows, the anything on this survey 50 or above means an expanding manufacturing base, and anything below is a contracting manufacturing base. And the February number was actually a slight contraction, 49.1. The consensus number for April, was 37.5, and the actual number was 41.5. So we're definitely contracting. We contracted a little less than people were looking for, but it's still a pretty large contraction. That will probably only get worse in obviously the month that we're in. That it's certainly more factories closed down, more things closed down, and those numbers certainly have not hit their bottom. As far as just talking a few minutes about the markets and what we can expect. Obviously, when I said we've retraced 35%, we've probably gotten a little ahead of our skis in the last few weeks. Earnings have been a little better than anticipated, especially from technology, which some companies really weren't affected at all. They potentially will be in the next quarter, but they at least weren't in the first quarter. And if you look at some of the prices and some of these securities, they've actually. Microsoft's actually still up on the year, which is one of the few companies. Amazon is as well, but that's for obvious reasons. Amazon's up on the year. It's actually down a lot today because they didn't do as well as people were thinking they would do. But it's still obviously an amazing company and positioned outstanding for unfortunately this environment. Well, really for any of them.
They poured all their gross profit for the first quarter into what's happening now, so it's like a zero-sum game for them right now, I guess.
It's a zero, but but typically Amazon will always sandbag 1 or 2 quarters throughout the year, and it will only hurt them. It will only really hurt them temporarily. The stock's down almost 200. But it's run up $1,000 in the last 6 or 7 weeks. So, it's a small retreat today for what it's gained, and it was at an all-time high pretty close, pretty much before it reported. So it's giving that back, but obviously going forward, it's positioned very, very well. On bonds, the 10-year Treasury is 0.625, which is amazing to think that you can borrow risk-free money from our government and not even make 1% for 10 years. But that's due to obviously the slowness of the economy, and where we're at. It's just really what the conditions are going forward. And what's going to happen, as I said, we're probably a little bit ahead of our skis, and we, on the overall markets. So we will see some backing and filling probably in the next few weeks. There are not a lot now that earnings are pretty much over, at least for a lot of the bigger companies. There's far less catalyst going forward, other than here seeing the economy is open in some aspects, and that's really what we have to look forward to. They are working on some other stimulus programs in the Congress and with the administration, and we'll see what happens with that. They're looking for some obviously some more state funding, and something really important there and would be really helpful to, I'm sure, a lot of people on this call. The administration is trying to whittle some liability protection for both small and large business, into this next bill, which obviously would really, really be helpful. It's great if we all get the PPP and we can remain, as a going concern for a period of time. But then if one of our customers comes down with COVID and sues us, and we all know what that could lead to, for the health of our businesses, and so adding something along the lines into the next bill would certainly go a long way to keeping us as going concerns and obviously businesses. It's really gonna depend on the virus and how quickly we can come out of this, how quickly we can get our economy going. Certain states are obviously starting to go back full force. I don't know if that's a good or bad thing. I'm worried that it could accelerate in those areas and get. And
I'm going to take the fifth on that one.
Right, and really could shut us all back down. But we'll have to see. I think it's almost better for the larger major metropolitan areas to wait a little longer at this point.
Yeah.
I think the worst thing we can do is to go back really quickly and then have to shut down again, at least from the market's perspective. So if we take another 2 weeks, I don't think that's that bad. I'm hoping.
The audio just cut off. Mitch, are you there? Mitch? We'll wait a few more moments. Okay. While Mitch is coming back to us, just a few notes. We're going to be closing out momentarily. I've been having some conversation in the background with several people that have been actively involved in the Small Business Friday Forum series. We had originally talked about ending it at the beginning of May. Since most of us are shelter in place still, the pause order is still very active in New York. We're going to keep it going for a few more weeks. I don't know for how long, but I've gotten some decent feedback that this is a fairly useful series, providing good information. So we'll keep it going for a few more weeks. We'll do one next week, and I imagine the week thereafter. And then we'll just take it week by week. If it's useful to the public as it is now, we'll keep it going. If not, we'll start to draw it down. But at the moment, we're good. Mitch, are you back?
Yeah.
Mitch? Okay, yeah. Sorry, audio got cut off a little bit, but I'd say it was only like about a minute ago. So everything that you said, we were able to hear, except for the last minute.
Okay. I'm pretty much done. If there's any questions, I'd love to take some questions. And if you have any questions about individual securities or your individual situation, Tom could provide my email address and my number. Everybody, I'd love to chat at any time.
Yeah, and I have Mitch's contact information on the screen here. I didn't put your phone number, but I didn't put your email address, but your phone number, 914-366-8000, extension 103. And I believe
Correct.
that your email address is mkahn, Kahn, at Hunter, F as in Frank, A.com.
Correct.
All right. Did we have any questions? Please raise your hand if you wanted to ask a question of Mitchell. I have a quick, just I guess a side note question because I'm in the technology sector as far as staying in tune with that particular sector. What did you think of Elon Musk? Well, actually, I don't know if you can comment on that because But I know that Elon Musk had mentioned he wants industry to open up immediately and such. I don't know if you can't comment on that. I certainly understand. I don't know if there's any opinion that you had on that, or.
Well, again, it depends really where you are. I
Right.
certainly see certain places in this country that are hit far less than other places. So if you're in one of those places, then yeah, I can understand you wanting your business to be back open, and I'm probably in agreement with you. I mean, there are places like Utah where there's only a few thousand cases in a state that it takes 10 hours to drive across. But in Northern California, it's icy. I still think so. I understand how he feels. And, he wants to be making cars, but I'm a little worried that where his factories are, it's a little bit more complicated.
Yeah, I find it interesting how we all have our leanings toward how government and business and such should be run. And I'm finding that a lot of people that have dug in the trenches on a particular, let's say, a position about that, starting to change their ideology one way or the other. So, interesting examples is, Mark Cuban is, I found very interesting. He's an Ayn Rand sort of guy. He's always been that way. And now he's starting to come out in favor of, for instance, universal, basic income. You have Mitch McConnell in Congress saying that maybe it might make sense to do a bailout of the various states and such, which that came from left field, and I'm not even commenting on that. I don't know if that's good or bad, but I'm just interested in the shift in mindset.
I don't think that he's forced. I think he's willing to give that for liability protection. So I changed his mind on that. I think he's willing to give in on that for other protections, which I think is important for all our businesses. I think that is a major thing for the business world if we have some type of liability protection. I don't think he's changed his mind. I just think he's fungible.
Mitch, thanks for being with us today. I know you're very busy at this time, as we all are, and just appreciate your insight. And, like I mentioned in the beginning, you just have this in-depth, I knew once you get on a roll, you just really have you get your finger on the pulse of the markets and what's going on out there. So I always love when you speak at our networking group, and doubly so here. I think you gave us some really great information. So thank you for being with us today.
Thank you. Thanks.
Okay. All right, so that's the close. We went a little bit later than we usually do. I try to get everybody back to work by 1:15, but I think hopefully in this case you'll find that our speakers today were insightful and up to date, and I hope at least some of the information will be useful, especially over the next week or two, as we start to thankfully begin to, not completely, but begin to start drawing down from the peak of the health crisis that we had. We suffered a lot of loss. I won't go into detail, but a very close family member of mine lost a very close friend of hers, who she had known for 50 years. It was, and I knew him too, and he's gone to the sweet by and by, and we're going to miss him. I think every one of us has some sort of story that this has affected us over the last several months. Not health-wise, certainly economically. There's a lot of change that's happened in just a few short months. But as I say when we always close, I know it's kind of cliche, we all hopped onto the same slogan that we will get through this together. But more importantly, we have to get through this together by being kind with each other, being patient, and maybe if you're inclined to do so, say a prayer, not just for ourselves, but for our fellow human beings. Because, I'll just quote, what good is it to gain the whole world and lose one soul in the process? And I think the thing that keeps our souls here is our fellow human beings. So that's it for today. Our proposed next meeting date is the same time next Friday at 12:30 in the afternoon. We will be posting this to the Rockland Workforce Development Board website that is located at www.rocklandwork.org. And we'll be sharing it around on Facebook as well, of course. That Workforce Development Board website is an excellent resource for information for individuals as well as employers that are looking to receive updated information on how to navigate through this current crisis. So again, thank you very much. God bless you all. And if you have any questions, please feel free to contact me. If you're on Facebook at any given time in the next week, I'm sure you'll see me somewhere on there. So take care for now. God bless you. Have a good weekend.